Good afternoon, everyone. Today is Friday, March the 18th, 2016. My name is Christian. We're going to look at several different market charts today, starting off with the Wilshire 5000 long-term chart. This is a 21-year chart, and each one of these marks is a week. So, actually, I just got a line here. So, the main thing I want to point out here on a longer-term chart is that the gray area marks where you would enter the bear market territory. And right now we are still above that, so we need to keep a bullish bias here. We got close to falling into bear market area earlier this year, but we bounced away from that. And right now we're still seeing very bullish conditions. I want to point this out to you. I wouldn't become bearish until you actually fell in below that point. Okay, once you got down there, then you could say, okay, now I'm going to be a bear. But until then, try to keep a bullish bias. Okay, we're going to start off looking at the Dow Jones Industrial Average short-term chart here. You can see a few weeks back when we saw the moving averages cross here, short-term moving averages at the 10 period and 20 period. We talked about this being a bullish condition. We expected price to go up here and test this point. That was a few weeks back. And that's exactly what we're seeing here. Okay, so we're finally seeing that come to fruition. The main thing here, note at the moving averages here are still separating. Still moving further and further apart from one another. That's important. It shows that momentum is increasing to the upside. That's a very, very bullish condition. You've seen this before when you had that cross like that. Okay, you see that they just kept going like that. And you found any pullback to this line gave you an entry opportunity. Other charts you might see even a pullback down to the 20 period moving average would be an entry opportunity. You don't want to change your bullish position until you start to see that break down. And basically in this particular case you can see we never got a close below the 10 period moving average until the condition had started to wane, right? So that would be a first sign that your strength had started to decrease. So you had bounced off of it, and then you go up here and you were not able to bounce off of it. That would be the first sign. The next sign would be that you actually closed below the 20 period moving average. Okay, so that's something I've been kind of pointing out to you guys. Don't be overly bearish. Don't be trying to short this thing. You're just going to be losing money. Main thing to point out here is that whenever you're in this bullish uptrend in a strong situation, your slow stocks will stay up there above the 80 line, showing that strong condition. You don't even want to consider trying to sell that until after you start to break down below that. So keep that in mind as well. Okay. Again, here I see a lot of strength. Continue to test this previous high here. Okay. Okay, here we are now looking at the NASDAQ, and this one again, 6-month chart. Each one is kind of representing one-day trading activity. You can see the same basic overall condition here. We talked about this one was happening. You got the cross of the bullish cross of the short-term moving averages, moving higher, taking out the previous resistance to just look for a test of this previous high. We are making that move, but it's a slower move. We're not as advanced as we see in the Dow, so there's more weakness here. This is something you can continue to trade, anticipating this to continue to press and test that previous high. Again, note the slow stocks is stuck up there above the 80 line. You did dip down below it, but sometimes, oftentimes, whenever that happens, you don't want to start selling immediately because, again, if you don't get some kind of confirmation, you can simply jump back up here like that. So you got this pullback here. Some people might have said, okay, that's a sell opportunity, but take a look right here at that moving average, that top line, the 10 period moving average. You couldn't get a close below that. Okay, telltale sign right there. That's not the end of it. One more detail to note here. Let's assume, for just argument's sake, that you are still in a bull market, right? That we've just had a correction in an overall bull market and we're going to return to that bullish condition. Well, what's important to note about that is that you're going to have some little details that are going to start to form up for you. The first thing to be that the 50 period moving average, just light blue line right here, this guy on a bullish market will be trading above this line right here, this light red line, which is the 200 period moving average. So you have to see that change, and at the same time that the 50 period moving average moved up there above that, you would then see price move up above that line. So right now, anything trading at the 200 period moving average or below that, where you're at right now, if you're in a bull market, is a great entry opportunity. That's why I wouldn't be looking to exit your position at the 200 period moving average if you're bullish at the situation. An overall longer term picture, this is actually just an entry opportunity. Okay, quick glance here at the Russell 2000 Small Cap Index. This one's also lagging the market as well. It's also oversold, one of the more oversold ones. Main thing I want to point out here, going back to the previous situation, we had the massive sell-off, and then we went even lower. Yet we saw in many of the different charts in that time period, we were showing that there was a bullish diversion where price had overshot to the downside, not being confirmed by various other indicators. Some of those indicators could have been the slow stocks like this. Okay, trending up. At the same time period, the price was trending down. Same thing by your MACD line. I wouldn't use it at the time, but it would have converted for those of you who did. I think we used the force index to show you the actual condition, but basically it was an oversold situation that called for a move back in the other direction. So now we've seen that, also got the confirmation. We got that change at the trend line here of the well, in this case I'm using the EMAs here, so 10 period and the 20 period, and then we have a nice advance and it pulls back and consolidates for a little bit here, right? And it's got a little wedge pattern going on here, and we had a breakout of that a couple days ago. So now we're breaking out to the upside. That means this move here, this first leg to the upside here, gets put out the other side. That's testing again at this previous high. So I expect you will test this high here, the highest point there. You can fail, but the main thing to point out right now is you're not seeing that. You're seeing an simply expansion of the MACD away from its signal line. That's an increase of momentum to the upside. You're seeing a breakout formation here, and everything is very, very bullish. So not something that I want to step in and say I'm going to short this. It's going to peak right here and now. I wouldn't do that. Quick glance here at the S&P 500 Large Cap Index 6-month chart. Each candlestick is 1 day trading activity. Same basic overall story. Very, very bullish, all confirming each other. You get the bullish cross, the simple moving, we were using simple movement averages when we first brought it to your attention, but now I'm looking at the EMAs here. And the main thing here is to show you again that you pull back to it and you find a strong support here. You bounce off of it. You do not close below that 10 period moving average here, here, here. Okay, as long as you have that condition, it's still very strong, very bullish. Expect to keep pressing higher. You've tested this area, which is what we were talking about happening a few weeks back. Now we expect to see either we break out and we continue to build on that bullish thesis, or we start to find resistance and we break down. But right now, we're not seeing any signs of that, so don't just guess where it's going to happen. Keep watching the chart, and when it starts to break down, it will signal to you to start changing its behavior, its pattern for that particular chart. Quick glance now at the Wilshire 5000, and this one, I'm looking at the the short-term chart, 6-month daily chart. This one here, it shows the most potential to argue for a breakout of previous high. Okay, so like this is the previous high right here, and you've got the same overall condition that was already shown you on the previous charts. You got the bullish cross, of course, but you'll notice again the same thing. You don't close below that upper trend line there, that moving average of 10 period here. You can't close below that, and you continue to press higher, breaking out all the resistance levels. But the main thing that's telling me that this is actually going to test this previous high here, two things. Number one, the force index up there at 22,200. Okay, it's higher than you've seen before. That'd be the first bullish condition there. It would give you a bullish divergence where you're looking at price activity is lagging the indicators, telling you that you should actually be trading higher than these points here. And you can see the same thing confirmed. You always want to get confirmation. See the same thing confirmed by the MACD. Okay, the MACD line. So you can see this high point here, and then you get a higher point here. So this is also calling for a test and breakout of the previous high. So again, I see no reason to try to sell this market. I just continue to be bullish here. Okay, I hope you enjoy your weekend. Be safe, and I will see you all again in the next one. Also, if you'd like to follow us on Facebook, you see a lot of these charts throughout the week, because I only post a video once a week, but oftentimes I'll see something that I find interesting and I share it with people on Facebook. So you can follow us there if you'd like. God bless. Take care. See you in the next one.